Well, good morning, everyone. Thomas Montgomery. We get together with our distribution partners and clients now on a daily basis, most weekday mornings, 8 o'clock Central, to talk about tips, techniques, strategies, share success stories, and to support each of you. On today's training, what we're going to do is go through some Q&A, or we could call it trivia. Some of the questions that you may have, or you might find that prospects may have in regards to the credit and funding program. So we'll address the question or even concern. We'll respond to it and then talk about why that is the case. So let's go ahead and get started. And if all is going well, you'll see the shared agenda now that was again sent to each of you this morning. So credit and funding trivia. So question number one, what is the upfront cost for the credit and funding program? Now, the short answer is none, but there's a more thorough answer, right? So the credit and funding program, which is most likely the program or the campaign that most of you will want to take out to the marketplace, and we'll be able to reiterate why as we go through our discussion this morning. There certainly is a refundable setup fee. So it's not that we're not transparent. It's not that we're not honest. There is a refundable setup fee, but financing is available. So it's like going to the car dealership. Is there a cost to buy the car? Of course. Can you drive off the lot with $0 down? Absolutely, because financing is available. So what we find that most prospects are worried about, what's my upfront cost? And the answer should be, well, there's none. There is a refundable setup fee. However, financing is available for that. And again, it's refundable. Now let's dig another layer deeper so we understand more thoroughly. So we have access to between 30 and 40, sometimes more than 40 lenders are online at a given time, kind of competing for the business of our clients. No hard inquiries, don't have to worry about that. And so these different lenders are out there wanting to lend money. Some are term loans, some are lines of credit, different types of financing, some through banks, some through credit unions, some through alternative lenders. So we have this consortium of lenders that are anxious. They want to loan money. So with that being said, some of them are remarkably affordable. Some are even 0% interest. Not saying all of them are, but some of them are. So when we say that financing is available, number one, that's true. And it's not to think, oh, well, sure, financing is available, but it's going to be 1,000% interest or whatever. No, I mean, in some cases, it's 0% interest. What's really nice about this proposition of avoiding their upfront cost is that we're able to get them to fill out a funding app. And in many cases, we'll be able to provide them a working capital injection. So in addition to just getting the $9.99 for the refundable setup fee, we might be able to get them what we call the first tranche, first round of capital. They might get 10, 20, 30, 40,000 cash funding right now. So not only do they not have to pay the refundable setup fee out of pocket, it can be financed. Also, they're able, if they qualify, to have working capital in their pocket. And that makes sense, right? Because part of the proposition, which we'll get to in a moment, for the credit and funding program is to get them funding. So it may very well be that we can get them their first round of funding day one. That also is a new trade line, because new trade lines improve the strength of the credit profile. So it's somewhat of a self-fulfilling prophecy. Well, I would say about half of our clients pay the refundable setup fee up front. About the other half finance it, and that's fine because they can walk away with working capital plus a new primary trade line. Okay, so are there any questions that any of you on the live Zoom have regarding question number one? To me, it's pretty straightforward. Is there upfront costs? No. Is there a refundable setup fee? Yes, but it can be financed. We have lots of different lenders, no hard inquiries. We can get them funding offers. And in many cases, not only will we get them enough financing for the refundable setup fee, they can get extra working capital in their pocket now. Make sense? Okay, so let's move on. What's the second question in our trivia today are FAQs. Well, that is asking what are the 4 main benefits of the credit and funding program. And we covered this last Thursday on the training when we went through the success stories, but let's go revisit it. I think this is very important that if you're going to be a small business consultant helping clients, you really, in my opinion, really need to understand everything we're covering on this page, especially this. What is the value proposition? Because if you can't competently and confidently describe the value proposition, then obviously people probably won't enroll. So clients can enroll in the credit and funding program with no upfront cost. We've covered that, how that works, and receive 4 main benefits. Let's go through those. Number 1, free assistance in addressing derogatory or negative credit. So what will happen, and we had a training and it's up on the careers page so you can see the implementation, but when we onboard the client, we will have a soft credit pull authorization they complete. We look at the credit report and we can determine what's going on with their credit and if they could benefit by having derogatory items removed, then we discuss that with them. Also, free assistance in adding new positive trade lines, because you and I know there's a formula to better credit. And in general, it's removing negative and adding positive. Now, that general formula isn't very helpful for an individual client. We need to look at the individual client and identify what's going on with their profile, but we're helping in both regards. Next, we're going to immediately transfer $10,000 of assets to the client. And we're going to talk more about that as we go through the training this morning, why that's so relevant, but that's an immediate benefit. So while they're certainly paying a refundable setup fee, which could be financed, they're immediately getting more in value than even what they've paid. Plus the refundable setup fee, of course, is refundable. And then fourthly, we're guaranteeing them the $100,000 capital raise in short order in 30 days. So to me, now maybe you see it differently. Maybe I'm too close to the forest to see the trees. This is a pretty darn strong value proposition. Anyone have questions on the 4 main benefits? We're going to spend some more time this morning talking about number 3 to make sure everyone's on the same page. But everyone good with the 4 main benefits? Okay. Next is you're going to run into some people that say, well, this sounds too good to be true. How is it possible? Well, obviously, it is based around sound reasoning and a process. So let's go through that process. So you and I are on the same page. And then if you're asked, you could explain it as well. So some people, if they don't understand things, they tend to want to dismiss it. And that can be true for many things in life. In your and my world, it comes down to financial literacy. And so how is it possible that we could help someone get funding, a lot of funding quickly? It sounds too good to be true. Well, not if you break down factually, well, what does it take to get funding? You need to be qualified to get the funding. Okay. So really what we're doing is getting them qualified, because if they're qualified, then they can get the funding. Okay, well, that makes sense then. So then the question that has to be asked is, well, what does it take to be qualified? Well, you and I know that there's different types of lenders, different types of funding sources, and each have their own underwriting. But in general, we know that it comes down to the 3 C's, don't we? 3 C's. Well, what are the 3 C's? Well, this is, again, a point of financial literacy. You and I understand it. Unfortunately, not everyone received the same education that you and I have. You've heard me say this story, and it's true. My youngest son just finished 7th grade. He'll be going into 8th grade here soon in the fall. And he had a financial literacy class, and he's coming home talking about the 3 C's. But somehow So that's at 13 years old. Somehow you and I are working with adults that are business owners that sometimes don't know about this. So again, it's a teaching moment for you and I. So if what we're trying to do is to improve our qualification for funding, we need to be cognizant of the 3 C's. Well, what are the 3 C's? And again, this is on your website, right? We provided each of you a free website. There's a credit and funding page on your free website. And much of what we're going through is on your free website, or at least referenced. Going a little deeper here in some cases. But the 3 C's would be credit, collateral. This is sometimes called capacity, but general people would probably more associate with cash flow, the ability to pay back. So what are we doing? How is this possible? Because it sounds too good to be true. It must be a scam. No. What we're helping people do is improve their qualifications. We're helping with credit, collateral, and cash flow. Now, let's not just stop there and brush it off. Let's dig into how we're helping them, because the why is as important as the what. Well, hopefully from the credit side, you already understand that answer, because we've specifically identified it in number 1 and 2 above. We're going to help them review their credit, review applicable negative items, and if needed, add positive trade lines. So hopefully that's the easiest to understand. But if that's all that we did, I don't know that the program would be as powerful as what it is, because there's much more. There's 3 C's. Now, if you just had good enough credit, is that good enough to get some types of funding? Absolutely, it is. But what we'd like to do is strengthen all 3 C's, and that's what we've built into the credit and funding program. That's what makes it so strong and different. So let's move on to the second C, collateral. What is collateral? Why does collateral matter? Well, again, it depends upon the type of funding, but many types of lenders, many types of loans are going to look at what the collateral is that is pledged, that in case the borrower doesn't repay, that they can collect to mitigate their losses. Well, sometimes these clients don't have a whole lot of collateral. Well, does that mean that this won't work? It's the opposite of that. We've planned for that. We realize that that may be the case. So we built in, not at some additional cost, not some buy up of, oh, you got to spend some more money that you didn't know about. Here's a hidden fee. No, what's included is $100,000 of assets that we're transferring over to the client. So we're transferring assets that they can put on their financials and then pledge as collateral. Huge, huge. And then the third C is cash flow, as I mentioned, sometimes referred to as capacity. Well, in some cases, people want to borrow more money than what they can afford, what they can show that they can afford to pay back. Some sources of capital don't dig that deep on that element, but just in case they do, we're literally adding positive cash flow to the client's financials by not only transferring those receivables, those assets, but then turning around and helping them liquidate those. And we're going to dig into what that means in a minute. So we'll peel that back one more layer in a moment. But the question, the trivia question, or the FAQ is, well, this sounds too good to be true. How is it possible? Well, funding is the output. And I'll say this, and I'm afraid you'll misconstrue it, but what you and I have as a goal is to get them qualified for funding. Because if we can get them qualified, then they can get the funding. The qualification is the hard part. The funding's simple if they're qualified. So how do we get them qualified? By addressing the 3 C's. Hopefully that makes sense. And this is included, right? So it's not like, oh, get in the door and then find out, oh, we're not going to help you with your credit. That costs extra. No, we're going to do what we promised to do. Oh, we're not going to help you with collateral. That costs extra. No, it's included. We're going to do that. We already said that. Cash flow. No, you're not going to really get cash flow. Yeah, you will. We're going to help you liquidate those receivables. Okay. Next, how long does it take to see benefits? Because one of the guiding principles that we follow is people, well, there's 3 main principles. Number 1, people don't want to pay anything up front. Okay, great. We've addressed that already, didn't we? Secondly, they want to see results fast. We live in a society where you better show me results fast or I'm going to be pissed off at you. Well, we're guaranteeing 100,000 in 30 days. To me, that's fast. Maybe to you it's not, but that's a pretty reasonable time frame. And we're going to start showing them value, tangible benefits right away. So to me, that meets their criteria fast. Okay, let me pause for a moment before we continue. So of the 4 trivia questions or FAQs, anyone have any questions on what we've covered so far? Because our goal today is to help you have a deeper understanding of the value proposition, so you have more confidence and more competence to enroll people. This is good, this is real, and this is an opportunity for you to make a lot of money, which we're going to get to in a moment. All right, so I think we're all on the same page. Let's roll forward then. Now we're going to get down to this. Well, what about this AR thing? Is that fuzzy? Is that gray? Is that just a paper transaction, or is it real? So let's dig into that. So yes, the accounts receivables that we transfer, which we made reference to up here in number 3, and made some reference to it in 3 and 4, or 2 and 3 here, it is real. It's real. If it wasn't real, we couldn't say it, we wouldn't say it, we couldn't do it, but we do it, and we, of course, talk about doing it. So the receivables that are transferred to the client are real assets. Real assets. They're accounts receivable. Now, again, once in a while, you and I will work with someone that is so financially illiterate, they're like, receivables, what? What does that mean? Well, if you've had at least accounting 101, we understand that when money is owed to your business or to you as an individual, it's called an accounts receivable. It means money owed to you, but you've not received it yet. So these receivables that we transfer to the client are real, and we help them immediately. So you see these adjectives, right? They're not just assets, they're real assets. And they're not just posted to their financials. We help them immediately post them. Now you might say, well, how does that show up? It depends, because the client can decide to post these assets on their personal assets or their business assets. Can't really do both, because you shouldn't be double counting that asset. If it's going on their personal financial statement, which many of you have seen, that's part of our process of developing, then it shows as a receivable. If it's on the business, it's also a receivable, but it's considered an asset, a current asset. Now, again, many of you have more accounting courses and training and background than I do, but my first job out of graduate school was with Deloitte & Touche, one of the world's largest consulting and accounting firms. And so I worked heavily with auditors. So what we know, what you and I know, maybe not everyone, is that assets are real. They post on the financials. There's a subset of assets called current assets, and accounts receivables that are expected to liquidate into cash in 12 months or less are considered current assets. Therefore, they can serve as collateral for funding. We talked earlier about the importance of collateral. So yes, the receivables are real. We're going to be transferring title or ownership, if you will, of real contracts. Now let's draw an analogy before we go further. Let's say that you and I wanted to go buy $1 million of defaulted mortgages from Sallie Mae. Could we do that? Buy those defaulted mortgages for pennies on the dollar, turn around, collect that money, or as much of it as we can, and make a huge profit? Absolutely. Could we go to Capital One and buy $1 million of defaulted credit card debts for pennies on the dollar, turn around and collect that, and make a great return? Absolutely. So the buying and selling of assets or receivables is commonplace in our society. So it's not make-believe, it's not unheard of. It just may be that the average person off the street isn't familiar with it. But here you and I are breaking down this receivable transaction into a small enough unit that it's affordable for the average person, but they still see all the benefits. They get the immediate collateral, and then they get the cash flow injection by liquidating it. So some of you would say, well, tell me about these enforceable contracts. I don't know what that would be. Well, just like I use the example of mortgages. Is a mortgage an enforceable contract? Sure. Someone signed up for a mortgage. At some point, they stopped paying it. House was foreclosed upon. And now Sally Mae or any home mortgage company can bundle those up typically and sell those to an investor or a debt buyer. Absolutely. Capital One, can they bundle up defaulted credit card debts or auto loans and sell those as debt portfolios to someone who buys them for pennies on the dollar and then turns around and liquidates, collects that, and makes a huge profit? Absolutely. So what we're bringing forth are defaulted enforceable contracts. And so we have the underlying contract. It's not just like a wink, wink, sure, here's receivables. That would not be prudent. These actually have what's called the underlying media, the supporting documentation. Some of you have asked for specific examples. So for example, let's say we have a small business consultant. Each of you probably on this training is a small business consultant. Let's take, we'll take Alonzo, for example, just because he's at the top of the list alphabetically. So Alonzo is live on the webinar now. He is a real small business consultant. He signed up with us. He completed a license agreement to be a small business consultant. So under that license agreement, there are some responsibilities that we have to Alonzo and some responsibilities that he has to us. If he should default on that, then Alonzo's defaulted license agreement, along with others, could be packaged up, put into a portfolio, and sold. So let's just take 10 of you that are on here now. So let's just say, and I know it won't happen, but we're just using an example. So let's say we got Alonzo and Bernard, that's 2, Charles 3, Eddie 4, Lynette 5, Julie 6, Lon 7, Patricia 8, Pauline 9, and Timothy 10. So we'll just take 10 of you. So we could put 10 defaulted small business consultant license agreements, put them together, and that would create a $100,000 portfolio. And then that can be sold and legally transferred to the client in the credit and funding program, then of which that client then is now owed the $10,000 from Alonzo, Bernard, Charles, Eddie, Jeanette, Julie, Lon, Patricia, Pauline, and Timothy. So is it real? Yes. Yeah. Is that money really owed to the client? It sure is, because there's an amount owed under the defaulted contract, and legally you can transfer ownership of that debt agreement. So yes, those receivables are real. Now, once the client has those receivables, so let's just carry this example forward. Okay, so the client has $100,000 of receivable. So now Alonzo, Bernard, Charles, Eddie, Jeanette, Julie, Lon, Patricia, Pauline, and Timothy all owe the client $10,000 each, plus late fees, plus collection costs. So now it's up to the client. Does the client want to liquidate to collect that money that's owed to them, which they could, or they can assign that to us and we'll do it for them. And so if we do it for them, it's just no different than what you would think. What happens when someone owes your business money? Well, normally you invoice them, right? And hopefully they pay. And we don't know. We don't have a crystal ball of who's going to pay willingly. But let's say that Alonzo, Bernard, Charles, Eddie, Jeanette, Julie, Lon, Patricia, Pauline, and Timothy all defaulted, which I'm sure they won't, on their small business consultant license agreement. So if we sold those defaulted license agreements to the client could invoice those 10 people. And I would suspect that Alonzo, Bernard, Charles, Eddie, Jeanette, Julie, Lon, Patricia, Pauline, and Timothy would all say, yep, I owe it. I owe the $10,000 license fee. I owe it. And so then Alonzo, Bernard, Charles, Eddie, Jeanette, Julie, Lon, Patricia, Pauline, and Timothy would either pay the client or make payment arrangements. That's what normal people do. They pay their bills. But let's say that out of those 10, let's say 5 say, yeah, I accept responsibility. The other 5 say, go fly a kite. Well, that could happen. And maybe it's 5 out of 10 pay willingly. Maybe it's 1 out of 10. Maybe it's 0 out of 10. Maybe it's 10 out of 10. We don't have a crystal ball. They're all real agreements. So if any of the debtors don't pay the client willingly, then of course, then we can report on the credit, personal and business of Alonzo, Bernard, Charles, Eddie, Jeanette, Julie, Lon, Patricia, Pauline, and Timothy if they don't pay. Again, just using this as an example. If that doesn't motivate them to pay, then we can litigate on behalf of the client. So then we would file a lawsuit against Alonzo, Bernard, Charles, Eddie, Jeanette, Julie, Lon, Patricia, Pauline, and Timothy in this example, all in effort to turn the receivables into cash, because that's what we want. So in summary, is the AR real? Absolutely. Absolutely. Is it supported by underlying media contracts? Absolutely. Any questions on the AR portion of the collateral? Okay, we're just about out of time, so let me wrap it up here. Is it a scam? And we addressed this a little bit earlier. I get this every once in a while. Well, this sounds too good to be true. Well, as I referenced earlier, for many people in our society, if it's something we're not familiar with, if we can't categorize it in our head or link it to some prior experience or education, then we tend to dismiss it. You know, can we really fly to Mars? Maybe. Have we ever flown to the moon? So yeah, we've flown to the moon, but we've never flown to Mars. Is it possible that Elon Musk can pull this together and fly a little farther? Yeah, probably so. Well, is what we do a scam? Obviously not. I mean, we've described how it's possible already. The FTC and the Attorney General have found our program to be compliant. So we've gone through the highest level of scrutiny, and in both cases received no complaints, no concerns, no changes, right? Because if what we did wasn't legal, wasn't true, wasn't compliant, we couldn't keep doing it, and nor would we have escaped the type of scrutiny we've gone through over the years as we've grown. So number one, absolutely, it's legally compliant. Number two, we have written agreements. Well, you might say, well, what's the relevance of that? When's the last time you heard of a scam being a written agreement, right? Does the Nigerian prince call you to get you to send them $100 so they can transfer $10 million of rubies to you and send you an executable written agreement? Obviously not. So yes, we're legally compliant. We have written agreements. And again, we've described why this works, because we're building their qualification through the 3 C's. It's not a mystery. We also have great service. We'll assign a representative that will provide personal assistance and support to each person. So it's not like that they just sign up and they're lost. And remember, they don't even have to pay anything up front. We've got guaranteed financing for them. All right, well, that takes us to, well, the bottom two. Do we have success stories? Yes, we went through success stories recently. And if you go to the on-demand trainings on the careers page, you can go through those. I didn't want to cut and paste all of those here. And then lastly, how much can you make as a referral partner? Because if you agree with what I've described as the value proposition, it's a great deal for the client. But the question, of course, is what's in it for you? Well, you're paid 2 ways. You're paid $100 up front, and that is paid based upon once the client has paid or financed, which means still paid, the refundable setup fee. So you're getting 10% of that, which is pretty generous. Plus, you're getting 3% of the client's capital raise. Well, if we're guaranteeing them $100,000, 3% of 100,000 is 3,000. Now, of course, they could get more and you get paid more. So usually we just round it off and say, well, you should anticipate earning $3,000 per client. But the truth is, it could be a lot more based upon the client's capital raise. The 3% portion is paid out as the client raises capital. So let's go back to it. So let's say we get the client in and they don't want to pay up front, which is fine. They fill out the finance app, and let's just say that they get a $20,000 cash offer. That's low, but not unusual. So they accept that. They pay the refundable setup fee out of that $20,000, plus they get $19,000 left over for working capital. Great start for the client. What just happened for you? Well, now you're going to get paid your $100 up front, which is fine because you probably spent less than an hour with the client. So that's not a bad return on your small investment of time. But also now you're getting paid off that first tranche of capital. So 3% of each tranche of capital raise. So if it was 20,000, bam, you're getting another $600. So that would be 700 right away, but you can see the formula. All right. And of course, you can always reach us via email, phone, or text. Who has questions, comments, concerns on this important topic today, which we kind of affectionately called credit and funding trivia? We wanted to take a deep dive, a deeper discussion of what makes the program unique, what makes it valuable, give you a deeper understanding of how it works and why it works. What can I do to help each of you make sure that you go out and enroll a new client today? So Alonzo, we'll start with you because again, you're at the top of the list. Alonzo, what can we do? And you can post it in the Q&A. Alonzo, what can we do so you go out and enroll at least one client today in credit and funding? Bernard, what can we do for you to enroll at least one client today in credit and funding? Charles, what could we do for you to enroll at least one client in credit and funding today? Same for Eddie, Jeanette, Julie, Lon, Patricia, Helene, Timothy, and 208 others. What do you need to be able to go execute off of this? You should have your free website. We have lots of training available that's specifically parked on this careers page. There's 5 training modules specifically oriented towards the credit and funding program. If you go through those 5 on the credit and funding program, you should be very proficient. You should have your free replicated website. You know not to go blast that link out. That's not best practice. You want to get the prospect on the phone, text them the link, and walk them through the enrollment. You'll have about a 90% conversion rate if you do it that way. All right, well, I apologize for the late start and then the late end. We'll see you back tomorrow morning. If there's anything else we can do, let us know, but you should have this. We emailed it out to you this morning as a reminder prior to the training. Thanks, everyone. See you back tomorrow morning. Bye-bye.